We'll talk more about crude in just a moment, and let me just give you the overall context as well. We did see markets off that winning streak that we've seen. Dow, in fact, starting with an 80-point decline. A little bit of nervousness around Boeing, a continuing lack of any fresh news on the trade talk front, and continuing global growth concerns. All these factors really leading to that nervousness or a little bit of cautiousness on Wall Street. S&P, however, did rebound from those lows and did manage to, of course, maintain its winning streak there as well. Furthermore, with some of the other triggers that we're tracking this morning, Aramco, that bond sale has seen a demand topping 30 billion. Now, that's a big one. Everyone seems to be dying for a piece of Aramco. All eyes on that. It's the third or fourth significant issue that we're seeing from the region now in the last couple of years. And U.S. crude, as you mentioned, has hit a 5-month high. Now, this is also spiraling on the back of clashes that we've seen in Libya. And with fighting intensifying, in fact, we've seen escalating tensions. And two of the world's biggest crude producers have also been caught in the mix there. So that's why we're seeing that. The dollar, just about a little weak there, and on the back of some of those concerns on crude, and gold is stable. U.S. also mulling tariffs on EU goods. Remember, this is an ongoing debate that they've had for the last decade, saying that the EU imposes subsidies for Airbus, and the EU saying the same for the US, that ongoing saga continuing. But again, not very good news for markets when we see some of these conversations take off. And the PM may be asking Merkel and Macron for a further delay on Brexit. That just continues to go on, that conversation. We'll have to keep on top of that and see if anything constructive comes out of it in the next few weeks. But crude, that's a big story, even relevant to our markets today. Let's go across to David Lennox. He's on the line with us to see what he's making of the current spike in crude. David, thanks so much for joining us. At a 5-month high, it's come out of nowhere, really. We were expecting some uptick in crude, but post what we're seeing in Libya, it seems to be escalating at an even more rapid pace. What are you making of the current levels?
Well, certainly I think you've got to actually go back into 2018 and late that year when we did see the oil price actually collapse. And that was on the back of a couple of concerns regarding demand and the adequacy of supply. So we saw the oil prices falling away. Now that we're almost let's say about a third of the way through this year, we've now seen some of those factors being corrected. Demand, for example, we do think that demand has settled at somewhere between 99 and 100 million barrels of oil a day. That was certainly being questioned late last year. And of course, as you've suggested, we've seen now some geopolitical events that are starting to further impinge on supply. So with OPEC continually maintaining its compliance at around about 30.5 million barrels of oil production a day, we have seen that recovery in the oil price since early 2019.
David, what exactly is the outlook in terms of the trajectory now for crude oil prices? Is there that fear that it could retouch those levels of $80?
Look, we've certainly kept our end-of-year price for Brent at between $74 and $84. So from that perspective, you can see that the price has moved over the course of this year just up towards the bottom end of our year-end range. We are expecting, yes, further compliance from OPEC, although having said that, Russia's come out and indicated that perhaps June will be the first time when OPEC will look at perhaps removing that ceiling. So that's going to keep the markets in some sort of turmoil. But we think that compliance will be further enhanced over the course of this year, and that's going to continue to keep the pressure on the supply side and hence higher oil prices. But having said that, as we saw last year, US domestic production has been somewhat of a headwind, and it will continue to do so, but not to the same extent. So we're looking for higher oil prices over the rest of this year.
When do you think we will get a tweet from US President Donald Trump?
Strangely enough, he's been quiet in terms of tweets on the oil price. I suspected he's been rather busy at looking at other parts of the American operations and his own government. So he's probably at this stage focused elsewhere. But we would think that if the oil price started to get in towards the middle end of that, or bottom end of our range at $74 for Brent, we would expect to see him tweeting that the oil price is too high. So at this point, we haven't seen such a tweet. So the oil markets are just quite comfortable that somewhere around this $70 region, probably up to 74, is going to be preoccupied elsewhere.
David, good to have you on the show. Thanks so much for joining in with that perspective. This continues to be a niggling worry for economies and markets like India. Let's see which way this is going to head.